of different pitfalls that people could run into. One of them is just not getting started. That's one of the biggest ones overall. Another one is overcomplicating it. Basically, people they get frozen by decision paralysis. They don't know how to get started. They get overwhelmed with options. A lot of financial investing content historically has been kind of jargony. It's kind of as though it's like put out of reach of most people. And I think another big one is over concentration. A lot of times when people do get interested in investing, they tend to get drawn towards some of the more high volatility or things that don't really compound super well. It could be, for example, people get really into like mining stocks because they're very volatile, even though they don't have a really good track record, or they get really into a big theme or something, rather than fully understanding what they're investing in.
This video has Lyn Alden discussing Bitcoin and crypto in the Bitcoin and crypto community. Lyn Alden is a well-respected macro analyst and financial strategist with a rare background in finance and engineering. She is known for her brilliant understanding of macro issues and how they affect asset prices and the economy, as well as her ability to present these complex issues in simple terms that anyone can understand. Her appreciation of blockchain and Bitcoin technology is evident in every interview, tweet, or article. Allen examines the dysfunctional global financial system and how it fast rewards the top 1% while impoverishing billions. Alden also emphasizes how, despite the abundance of energy and technological advancements that have greatly improved our lives, our monetary system is still antiquated and problematic. Despite humanity's accomplishments, such as walking on the moon and many medical breakthroughs, we're still burdened by a debt-based fiat system. Over 160 currencies are used worldwide, each with a local monopoly. The global financial system is essentially a barter system, thus being born in the wrong country makes saving money harder. However, weaker currencies will eventually collapse, making today's strong currencies weaker. Lyn Alden believes that the US dollar and other major currencies still have significant value relative to these weaker currencies, which could lead to the US dollar's demise like the Bavar or the Lebanese pound. Sound money proponents like Alden believe that our outdated monetary system should be replaced with one that prioritizes decentralization, scarcity, deflation, and smooth payments. Alden's recent interview on the Prof program, where she talks stable coins for Bitcoin and the cryptocurrency market, among other topics. Please watch the video to the end, like, share, and subscribe to our channel.
That's certainly the kind of framework that I entered investing from. I would basically read Warren Buffett and that kind of content back when I was like a teenager, and I would look at buying companies at reasonable prices based on their fundamentals for the long term. Over time, I've looked at multiple different investment strategies. Value often has the kind of perception that it is opposite of growth. That basically it involves kind of lower growth, cheaper companies. Where I think a more holistic understanding of value investing is that basically it's fundamental investing. So that can include a growth company as long as you're basing your research on the fundamentals of what you expect the company to do, rather than say purely chasing things like price. And Peter Lynch really popularized that strategy back in the 80s, like growth at a reasonable price. That's basically that could be kind of the intersection between growth and value investing. In recent years, I've incorporated more macro analysis into my investing frameworks because I kind of started to view back in say 2017, 2018, that this was to be like a macro heavy decade, which means that things that are outside of any one company's control will move a large portion of the market. So I do incorporate kind of a macro overlay that helps me determine potential growth rates of companies and things like that. But yeah, at the heart of it, I like to buy profitable companies at reasonable valuations that I think are going to be providing a good product or service over an investable time horizon, 3, 5, 10 years, and then let that thesis play out over the long term.
Let's do that. Let's overlay the macro. What do you think are the big macro factors that provide sort of the atmospherics for some of the decisions or recommendations you make?
A big piece of it is the fiscal dominance, is how I would phrase it, that most of the past, call it 40 years of investing history, was under a period of monetary dominance, which we can think of as central banks and commercial banks having a very big influence on markets. And so most economic expansions are these periods of heightened bank lending activity. And then most of the recessions are periods where banks are pulling back their lending, and often because central banks are tightening for various reasons. But there are other periods in history where the fiscal side becomes as big or sometimes more of an important variable than the bank lending side. And so, for example, if you look at annual net bank loan creation and you compare that to annual fiscal deficits, in most decades, the bank lending would be a bigger sum than the fiscal deficits, especially if you also add corporate bond issuance, net corporate bond issuance. So basically, how much kind of private sector lending in various forms, either securitized or not, is happening compared to the size of the fiscal deficits. But the 2020s, and really kind of even like the year kind of leading up to that, like 2019 or so, we're now getting to a period where the fiscal deficits in a given year are bigger than new bank loan creation and bigger than even the sum of bank loan creation and net corporate bond issuance. And the last time that the U.S. was in that situation was really the 1940s. So it's a very long-term historical kind of framework. Japan finds itself in that position today. And in that kind of environment, you tend to, on average, run inflation a little higher than you would otherwise. You tend to have a little bit less cyclicality in markets because you have this background deficit spending that's happening. And you tend to get bigger bifurcation between different sectors. And so, for example, in the say the last year, if you're on the right side of fiscal deficits, meaning, for example, if your business is catering to recipients of Medicare, Social Security, defense, your business is doing pretty well. Like if you're in the travel, hospitality, restaurant business, you're doing fairly well in this environment. Whereas if you're not really on the right side of fiscal deficits, if you're more impacted by the monetary situation, like commercial real estate, for example, then you're in an outright depression. And so you get, when you have that kind of tight monetary, but also very loose fiscal policy, you get into a very bifurcated type of market. And so um, that kind of led me to say be less bond focused, more equity focused, and to make decisions like that for my portfolio. And some of those have played out far more usefully than, say, avoiding one company or picking another company. Having those kind of big asset allocations reasonably correct has been a huge source of risk reduction.
On X social media, according to data from the cryptocurrency analytics platform Simon, traders continue to give in as Bitcoin prices range from $65,000 to $66,000. Santon stated in a June 20X article that FUD stood for uncertainty, fear, and doubt, and the population is primarily afraid of or uninterested in Bitcoin. At the time of publication, this metric measures Bitcoin mentions on X and compares the ratio of positive to negative comments. Bitcoin mentions have been mostly negative since May 23rd, but positive events like the approval of 11 spot Bitcoin exchange traded funds on January 10th and the price of Bitcoin on April 20th saw the indicators turn positive, increased to 4.49 and 2.35 favorable and negative Bitcoin sentiment on social media since the Hong Glass. Bitcoin has been on a 150-day downhill journey for 60 days. In a June 19th post, no-head analyst James Check, known as Checkum, called the preceding few months of sideways price activity the dullest spell in the bull market. Pseudocrick trader Gel observed that while Bitcoin is dull, some observers think its prolonged stability may be beneficial. On June 13, The Telegraph reported that Bitcoin was in its longest stretch of consolidation at 92 days, with analysts suggesting that the currency may be poised for a big upside rebound. While pseudonymous Crypt, the Fear and Greed Index, another cryptocurrency market sentiment gauge, is showing a greed reading of 63 at the time of writing, down 11 points from the previous days. This metric also considers social media sentiment and other aspects. Market dominance, momentum, and trends return to Lyn Alden interview.
Well, so there's an interesting trend that I think led to this, and I agree with you. When you see people today talk about the risks of the debt and the deficit, you often see the response to that is people said, "Well, people have been concerned about this for decades, and look, nothing bad happened." And it's funny when you look at when the national debt clock went up. That was the late '80s. Ross Perot ran the most successful independent presidential campaign in modern history, based on largely debts and deficits in the early '90s. That period was kind of the peak zeitgeist for public concern around the debts and deficits. But the phase we went to for the next 3 decades was that China opened up to the world, Soviet Union fell, basically large amounts of labor and resources got connected to Western capital, a big burst of globalization, very disinflationary. And so we kind of had this period of 30 more years of falling interest rates, and that offset a lot of our public debt accumulation. So if you double your debt but you cut your interest rate in half, your interest expense still seems quite manageable. And I think people got lulled into a false sense of security that they kind of said, okay, we were worried about the debts and deficits. It turns out we didn't have to worry. We're fine. And then now people kind of, I think, the pendulum swung the other way, that people are saying, look, what we've learned is that they don't matter. But I think the key risk is that our interest rates they bounced off zero. They're now going sideways to up. I think we're in a structurally like no longer declining interest rate environment. And when you have accumulated debts and deficits and interest rates are just going sideways, let alone up, that offset's gone, and the debts and deficits actually start to matter quite a bit more. And then, as I said before, when that sum of fiscal deficits is larger than the amount of net bank loan creation, or even the sum of net bank loan creation and corporate bond issuance, that's just a much bigger factor on the economy. And then in addition, you can get to a point where the Fed rate hikes they lose their effectiveness to fight inflation.
Michael
Bec-
Saylor, co-founder of MicroStrategy, has already given Michael Dell a Bitcoin proposal, saying that it represents the equality of digital resources. This comes after Dell, the CEO of the huge U.S. computer company, made a statement on social media on Thursday about how scarcity drives value, which got Bitcoin users excited. X mysterious social media post that seemed to refer to Bitcoin's fixed supply limit made cryptocurrency fans wonder what the 59-year-old billionaire was thinking when he made this claim on his account, even though he thought that blockchain technology, which powers the biggest cryptocurrency, wasn't getting enough attention. Dell had said before that he wasn't interested in Bitcoin. It will be interesting to see if people like Saylor can get Dell to change his mind about Bitcoin. In 2020, Saylor and Tesla had a friendly conversation on social media. Elon Musk, the CEO of Tesla, was persuaded by Elon Musk to buy the biggest cryptocurrency. In 2014, Dell became the biggest store to accept Bitcoin. But in 2017, the computer giant stopped accepting Bitcoin because it wasn't used as a form of payment or a way to store value like gold. Even though Bitcoin has changed its name, not everyone believes this story. In response to Delta's tweet, one person said, "Scarcity by itself does not produce value. This is something that gold bugs like Peter Schiff often talk about when they say that scarcity without utility is useless." If you learned something from this video, please like it and subscribe to our channel.